much, Shawn and Hazlin, for your sharing. We have covered quite a lot for global fixed income and equities. Zooming into Malaysia, Hazlin, Malaysia's six state elections held 2 weeks ago concluded with status quo. PHBN coalition retained the three states, Penang, Selangor, and Negeri Sembilan, but with slimmer majority overall. Perikatan Nasional retained Terengganu, Kelantan, and Kedah with super majority, and with a clean sweep in all of Terengganu 32 state seats. He also made inroads into Penang and denied the unity government's two-third majority in Selangor. So, what will be the outlook for Malaysian market moving forward, Hazlin?
Okay. The recent, I think the green wave, they call it, serve as a reminder for the existing elected ministers in the current government to work hard in the future, actually. Since the parliament seats there is no change, so the current government have ample time to proceed with the economic plans that which they have already launched, like Madani Economic Plan, National Energy Transition Roadmap, and also reviving the KL Singapore HSR projects. I think the flow from this news already we can see in the stock market, which already affected the like some of the property companies start the price also start increase after the news, actually, because since there is no change in the government, so the mandate will be there as of I think this all big ticket item definitely will be funded by the public and private funding, which we expect more issuances for these projects going forward. So we believe that the GDP for 2024 around 4.5 can be achieved.
All right. Okay. Thank you so much, Hazlin. Anything to add on top of what Hazlin has shared, Mr. Chia?
Yeah, maybe just a broad stroke on Malaysian equity market is the now that state election has over, it has definitely removed a key overhang, and we know that from now until the next general election for the parliaments or for the states, that is a few years away from today. So from global investors' perspective, they will view Malaysia as, hey, in the next 3 years at least, there will be a lot of political stability. There won't be any election to change the government or change the state government. So that is good. Because the political uncertainty has been one of the major overhangs for Malaysian market. So now that's sort of removed, at least for the next 3 years. So that by itself is good. Like Hazlin shared, it has already attracted foreign flows. We are already seeing KLCI improve. Some of the large cap has done better. So the state election issue has been positive. And now, hopefully, with the implementation of some of the new policies that will help to spur a bit of growth above the organic level. Yeah.
Yep. Thank you, Chia, for your sharing. On top of what you have shared earlier, looking at the inflows in the looking at the inflows in the Malaysian markets lately by foreign investors, do you think the foreign buying into Malaysian equities will continue to persist?
I think it should. But the area where I'm not sure is the magnitude. So far, the inflow has been positive, but the magnitude has been quite gradual. I won't say it's like a huge inflow. I think it should continue to improve, but whether it will improve in a big way or in a moderate way, honestly, I'm not sure. If you ask me to take a guess, I think it will be a moderate inflow. Why do I say that is, while the removal of political uncertainty in Malaysia is a good thing, it's a very good thing, but I think when global investors, foreign investors look at Malaysia, they also like to compare Malaysia with other countries in Asia. For example, they'll compare us with Indonesia, with Thailand, Singapore, and they will also compare us with places like India, Taiwan, China. So they will compare and see which is better. Now, naturally, if you compare Malaysia with China Outlook, for example, Malaysia actually looks better. If you compare Malaysia with Singapore in terms of growth, real growth, yeah, slightly better. But if one just focus purely on growth, some of the foreign investors may say, hey, the more interesting story is actually in India and Indonesia. So in that sense, I would not expect huge inflow into Malaysia. Because while Malaysia is okay, but there are other countries in Asia that stand out better. So that's the nature of foreign investors. Because they have options, right? They can choose whether it's Singapore, Thailand, China, India. So they tend to cherry pick. So to stand out on a relative basis matters too, to determine the inflows. Yeah. So to summarize, I think the positive inflow should continue because we have seen years of negative outflow. But is it a huge inflow, rapid inflow within the 6 months, 1 year? I think it's a bit tough in that sense.
All right, thank you, Chia Wei. Speaking about inflows of Malaysia equities market, we see Malaysia bond market also year to date we see very strong inflows amounting to over 20 billion ringgit. Is there any reason for this, Hazlin?
Okay, I think the latest numbers in the recent month, July, which is about 11 billion inflows from foreigners in the bond market, which is double from the previous month we having since year to date. So it shows that the interest from the foreign investors there. I think the main factor that they will look at is the political stability. Since the new elected government led by the unity government, they call it the unity government, led the Prime Minister Anwar Ibrahim, giving some sort of like comfort to the investors with less change to the existing government policy. So that's why after the PM was elected, the inflow will start coming into the Malaysia. Compared to the last year, we saw outflows in the August months before the elections. So first, definitely political stability for Malaysia, and the second, I think because the slow growth in the global economy, start from the beginning of the year, we noticed that most of the strategies start giving recommendation of high position in the fixed income, looking at the numbers from the World Bank and IMF about the GDP forecast for 2023 and 2024. So that's why the higher allocation for fixed income was put beginning of the year actually. So, and third, I think the main reasons why Malaysia being having an inflows of foreign inflow in the debt markets is I think because the MGS and DII have been put in the major indices just like FTSE World Government Index, Bloomberg Global Aggregate Index, JP Morgan Government Bond Index, Emerging Markets and Markets iBox Asian Local Bond Index. So our MGS DII have been put in the major indices. That's why easy for the foreign to trade. That's it.
Yep.
I think that's the reasons.
Yep. Thank you, Hazlin, for sharing. Seems that Malaysia remains an attractive destination for investors to consider. Perhaps the last questions for today's session. Hazlin, could an interest rate hike by the Bank Negara Malaysia potentially address the concerns regarding the recent weakness in the ringgit? Sorry, Hazlin, could an interest rate...
Okay, sorry.
Yep, could an interest